Hello and welcome to another edition of the Crypto Club and Digital Assets weekly catch up on Zoom. It is Sunday, the 16th of March 2025, and as is always the case, we never quite know what we're going to be talking about. Subjects that we cover depend entirely upon the audience. Typically, though, we'll talk about blockchain, DeFi, NFTs, ICOs, SCOs, TGs, all sorts of three-letter acronyms, really. If this all sounds really foreign and weird to you, then stick around. Hopefully you'll learn something. For those with more experience in this space, we've got our Gone in 180-second sessions. This is where startups and projects have 3 minutes to pitch their project without the aid of slides, demos, or anything else. Just speaking for 3 minutes, kind of an elevator pitch. Hope you enjoy the session, get some value out of it. Do click on like, the subscribe. Even better, come on to a future event. So with that, let's see who's going to come and join us today. Hey, Gabriella, welcome back. JT, hello. Annie, hello. And we've got Stuart joined us as well. Welcome back, Stuart.
Thank you. And I've now sorted out the time differences between the UK and America.
Yeah. Until the UK then changes its times as well, and it all gets confusing again.
I know, it's like taking a blanket and cutting a foot off the top and putting it on the bottom, and they don't quite get how they justify it. Wartime measures, I guess.
Exactly. And it then gets even more confusing. I used to travel over to Europe sometimes, and you'd get a situation where Europe would change at a particular time. You'd fly over to Frankfurt or whatever, have to change your clock. Then you come back to the UK, and then a week later, the UK had changed and everything. So it all gets... The sooner we all operate to UTC or something and just stick with it, the better.
It would be good, yes.
Absolutely. So this is something.
But apologies for being here an hour early.
Better than being here an hour later, missing all the action and the excitement, and missing out on a opportunity to chat with JT as well.
Absolutely. Hi, JT.
Hi guys.
See, it's interesting as well, this whole thing about time zones. It does tie in with one of my bugbears about things like blockchains and distributed ledgers and everything as well. Because if we can't sort out basic things like time zones and differences and that, how do we do things like synchronization and commonality around the world? That just adds to the confusion.
We're not using a clock in ours as such, a reference clock.
Okay.
It causes too much confusion because you've got the half-hour time differences, you've got all sorts of little things that go on around the world annually.
Yep. And we're joined by George as well. George Wagner, hey there.
Hello, good evening.
Oh, thanks for joining us. Whereabouts are you based, George?
I'm from Spain. Actually German, but I live in Spain.
Okay. Well, may I inquire which part of Spain you're in?
In Madrid.
Okay. So we have one of your neighbours on today then, I think.
Oh, good. Who is that?
Gabriella, you in Madrid still?
Yes, I'm in Madrid as well.
There you go.
Oh, cool.
Yeah, it's clearly a crypto capital.
What are the odds of that?
Well, actually, a few weeks ago we had Rebecca on, and Rebecca was also from Madrid. I think she teaches at one of the universities there. So this is a crazy thing about the crypto world. It's a very small world. I'm joined as well, Richard. Hello, Richard.
Hi, Richard.
Hello. Hi, everyone. Nice to see you, Annie.
Richard, are you in the UK then, by any chance?
Yeah, in Hertford, so just outside of London.
Okay, yep. Just top end of the M25. Well, welcome aboard anyway. So we've got, what's that, half a dozen people already, which is great. We missed out last week. We didn't have a session. For those like George and Richard who've not been on these sessions before, we never quite know where we're going to end up with these conversations. It really comes down to the participants. But typically we'll end up discussing like distributed ledger, blockchain, crypto news and development and that. And also it provides an opportunity if any of you would want to talk about your particular projects or initiatives. Richard, you've said separately already, you're up for going in for the Gone in 180 Seconds session. Excellent. So we can do that in a minute. I don't know, George, what brings you along today? Any particular interest or any passion or anything?
I saw your event on Meetup actually, and I was curious about the topic. I know about crypto. I hold crypto, but I also have other investments, and I would like to reconnect. I didn't really focus on this topic for a long while. I was more active like a few years ago, and I would like to reconnect and see what the trends are and what the outlook is for the next months.
Fantastic.
Yeah.
Well, it's good. Well, we have a whole mix of things in these sessions, so we never quite know where we're going to go on it now. What suggest then, Richard? You wanted to do a Gone in 180 Seconds session. Are you up for that now?
Yeah, by all means.
Okay.
So never done it before, obviously, but
So it's all right. Just give me a moment then, because in fairness, I'm going to set my alarm clock for 3 minutes. Right. And the way we do this is it's great fun. Yeah. Well, it's fun for me because I just get to sit back and watch everyone suffering. But for anyone who's watching, Richard included, we've got a timer, 3 minutes, where you get to talk about your project, your idea, your initiative, or whatever. Please don't bother saying things like, oh, can I just share my screen, or can I just show you this demo? This is like an extended elevator pitch where you got 3 minutes just to talk about the thing. Please, no direct selling, no phishing, scamming, whatevering, because I'll just delete it all and I'll ban you and it won't work out. But it does provide you with a great opportunity to just talk a little bit about the project, and then the audience can ask questions, and the audience can be quite brutal at times, but very supportive as well. Yeah, great. We've got Stuart's going. No. But yes,
Stuart talks about China. That's it.
that'll be good. Yeah. But yeah, and the great thing as well is that we've got people on the call. Certainly the ones that I know who've got a great deal of knowledge and experience in the whole crypto, distributed ledger and blockchain space as well. So it can be a great opportunity to just sanity check whatever you're involved in. And also, this is recorded, so please no swearing or whatever. But it also means if you want to use it afterwards, if you're chatting to people, feel free to point them to this. So you have got, Richard, 3 minutes to talk about whatever your project is, and that 3 minutes begins now.
Hi everyone, my name is Richard Holdsworth. I'm the CTO and co-founder of a project called Excavate, and we've been building for about 3 years on the Polkadot platform, or with Polkadot SDK. We've built, it's like a two-tier system, if you imagine. It's a base layer, it's a modular protocol specifically built for the tokenization of real estate assets throughout its lifetime. So from land acquisition, registry, planning, construction, the finished properties onto property management. That's the sort of the vision. And we've built a decentralized marketplace to allow real estate developers, new build real estate developers, to list their properties once they've gone through all the checks in a regulatory compliant manner that is then bought by hundreds of people around the world. And the property itself is, the title deed is transferred over to the SPV and it's managed by the token holders. So all decisions are made using a DAO structure in effect with the token holders. And then the property is rented out, and the token holders get a yield as well as owning part of the share of the property. So we're starting in the UK, starting with properties around London. We've got about £50 million worth of properties to put on the platform. That should be happening in the next 3 months. We're just finalising the FCA sandbox. We're on the regulatory sandbox at the moment. And then we're talking to some countries about the idea of bringing land registry on chain. So we're defining a standard, if you like, for that sort of. It's easy to tokenize those kinds of things, but it's not easy to define the standard and initiate that at scale. And that's what we're doing.
You've got a minute left if you want
to. Okay. So, in terms of, we're working with the University of East London. We're doing some research initially in the UK, but then we're going over into different countries about exactly how the systems work from end to end. We are also working with a number of other partners. There's Accurast, which are a network of repurposed mobile phone processors, which are like 50 times cheaper than AWS for executing oracles and other data. So we do basically any off-chain processing is utilizing that network, and then we verify that data on-chain. And we're utilizing the KILT protocol for digital identifiers. So each user will have their own digital identifier and verifiable credentials like KYC and AML and things like that. But and we're partnering with Archax, which is an FCA exchange in the UK. I think that's probably about it. There's probably loads to pick apart there. Any more time?
No, that is it. You are on 3 minutes. Perfect.
Cool.
That's really good. Thanks, Richard. I guess straight away we'll start off with a couple of opportunities for you to explain a little bit more, because you mentioned 2 3-letter acronyms that I happen to know what they are, but you might want to quickly explain them. You mentioned an SPV, a special purpose vehicle, and you mentioned a DAO, a decentralized autonomous organization. Do you want to just give a little bit more detail about what they are, and then we'll drill into the questions a little bit more?
So an SPV, a special purpose vehicle, is a legal entity, could be a company, but also a limited liability partnership in which you can purchase assets like real estate. That's generally how most professional real estate developers and investors either develop a piece of land or purchase multiple properties. And we've taken that, the way in which that works, the legal structure, and applied it to a collective of investors using property tokens. So the other thing that you've mentioned is a DAO, so a decentralized autonomous organization. So the way the SPV operates in terms of any crucial decisions around the piece of property, i.e. if something breaks and something needs to be repaired, and it's over a certain threshold, maybe a couple of £100, then the token holders will vote using their application as like a decentralized autonomous organization.
Oh. Who's got questions? Oh, I've got one last question. What was the name of the project again, or the company again, or the website?
Excavate, no E, so just XCAVATE. And you can go to excavate.io.
Great. Okay. Who's got questions then? Stuart looks like he's poised. Go for it, like a coiled spring.
Okay. Are you, Richard, are you aware of Anthony Abel, TPX
Yes.
in London? Okay, he's doing much the same thing, because I spent.
No.
You don't think he's doing the same thing?
He's doing property tokenization, but it's a different kind of vertical. He's tokenizing someone's real estate, and then they are able to then spend using that asset. So he's unlocking liquidity in people's assets. It's a different model, but yeah, it's tokenization of real estate.
So essentially, in the SPV gets registered, and then the shareholders of the SPV vary based on, are they locked in or are they able to trade? You said you had a marketplace. They can
trade in. I mean, we were going to call it a secondary marketplace, but because it would then be classed as an MTF, which is a multi-trading facility, we call it a notice board. So a token holder can relist their property tokens on the notice board, and then they would liaise with a buyer and agree a price, and then resell for that price. So that's
right. And are you doing it for one development, or are you doing it multiple developments? Or?
No. It's a permissionless system. So the real estate developers need to have a certain amount of XCAV tokens to be able to bond to a property to make sure that they are a legitimate developer with a real property, and then
so that's like a liquidity pool.
Not a liquidity pool. When you say liquidity pool, what do you mean by that?
Well, in order to trade, you've got to have two sides of the equation. You've got to have a buyer and a seller. There isn't always a buyer or a seller. So how are you going to make up the liquidity if I've got tokens on the market? The liquidity goes away.
Yeah, so we're talking to various partners about sort of having that liquidity pool. We're also looking at the possibility of the Treasury doing a buyback scheme. So those are two options.
And the Treasury is run by the DAO?
Yeah. Depends what DAO you're talking about. So the Excavate protocol has its own Treasury.
Right.
And each property would be its own DAO, which won't have a Treasury as such because there's a relationship with a letting agent that acts on behalf of the SPV. So they would have like a couple of £100 as a float, and then any other income that needs to pay any bills would come out of the income relating to the rental income. And if there's any more required, I mean, these are all brand new properties. They're guaranteed for 10 years. But obviously, if there are any other bills that are required, then that would need to come out of the rental income or agreed regarding the token holders, whether they need to pay in to cover any bills.
Is this just for the UK?
UK initially, and then we're looking at Dubai, and then there's about 4 other regions that we're looking at.
Right. I was going to say there's some issues I can think of in the US market, which is so fragmented anyway. But the reason I asked this is because I spent a lot of time with Anthony, and also I've looked at it over here, and I'm a property developer on the side as well. What's the capitalization of this?
Do you mean as a project?
Yes. Where are you in your lifespan? Have you gone on the market yet? Have you?
So we did a Crowdcube raise at the beginning of the year, just raised a couple of £100,000. We're doing a raise on Polymech, which is a Web3 crowdfunding platform, like the token sale. We're launching live and doing a TGE at the end of June. So we currently have a current valuation of $10 million.
Is that going to be enough?
Well, the raise currently is looking at about $500,000, which will get us about sort of six months to 9 months runway. And by that time, we'll have sold our first properties. So we'll be doing additional raises as we go.
When you say you will have sold the first properties, what's your confidence level in that, given the market in the UK?
We've already pretty much sold the first 3 or 4 properties. We've got my co-founder has been selling property in the UK and around the world for about 23 years. He's got a couple of other businesses. He's got a list of 10,000 investors. I mean, on the Sandbox, we're limited to 500 investors, 10 real estate developers. So we're quite limited for 6 months anyway. So I think demand is going to way outstrip what we can do in terms of the first 6 months.
And you're using smart contracts, right?
Well, it's actually it's a pallet-based system, so it's actually part of the runtime rather than smart contracts. But fundamentally, semantics. Smart contracts are just self-executing code, but it's a lot more efficient and scalable than any other smart contract out there.
Right, and it's not going to be high velocity anyway, is it?
Well, the scalability of what we're doing will be. We're talking with a country
you can't scale on Polkadot,
$100 billion in assets. That's pretty scalable.
Yeah. I don't understand the word scalable when you've got Polkadot as the blockchain. But
what do you mean?
Go for it.
They're not scalable. Smart contracts are not scalable.
I don't know what world you've been working in, Stuart, but Polkadot has a multi-core system, so you can use many cores.
I'm aware of it.
Right. So what part is not scalable then?
The fact that you're processing the contracts They're not scalable as such. If you present 1 million contracts to it at the same time, it doesn't suddenly scale up. You still go into queue. You go into a queue. Scalability is the ability to handle the queuing and processing.
Yeah. Well, it's achieved 160,000 transactions per second on.
How do you measure TTSs? It's not a completed transaction end to end. It passes through, but it's not a finalized transaction.
It is finalized. It finalizes.
No, it's not.
It does.
Okay.
I've been building on this for 3 years, Stuart. I'm like, how much building on Polkadot have you done?
I've been in the world for 7 years.
But how much building have you done?
We decided not to use Polkadot for a number of issues, and we built our own chain.
Yeah, but it doesn't matter if you build your own chain. You're working in with a specific tech stack.
We're not using smart contracts. We're not using smart contracts. We're using smart assets.
It doesn't matter.
Okay. It doesn't, as far as you're concerned.
Could I throw the one in the middle then?
Go for it.
Because I hear about scalability all the time, just like I hear comments like real-time systems and that kind of thing. The reality, Richard, for the volume of transactions you are likely to be executing, does it actually need much in the way of scalability? You're presumably not looking to be processing with any regularity 10,000 transactions a second.
No, not at the moment, no. But the whole point of the scalability of Polkadot versus other ecosystems is that Polkadot randomly selects 3 validators to validate the blocks of a parachain. So we're building a parachain, or we've built a parachain. We're launching in the next week or 2. So our parachain will present the blocks to the relay chain of Polkadot, and this randomly selected 3 validators will validate the blocks. That all happens within 6 seconds with asynchronous backing. So I really don't understand Stuart's point, but if he's got a different system that works for him, that's fine. But you can't say things that are simply untrue about a system like Polkadot.
But that's the thing. Oscar actually picked up on it in the chat where you mentioned time to finality, because it's not so much about how many transactions you can handle. It's how long does it take to complete the transactions that you're processing, really. And for something, I guess it depends the market you're going in for. And this is where I find it fascinating, because real estate and blockchains are a very interesting combination. I've seen over 60 real estate projects fail where they've been like tokenization of blockchain there, and they've all failed for a variety of different reasons. So there's always new ones coming along, and they don't succeed for new and interesting reasons and that. But the reality, I would imagine, for the stuff you're doing, if it takes 10 seconds to complete a transaction, that's not exactly the end of the world, is it? I'm thinking in terms of how long it takes to do when you're buying and selling a property at the moment. Completing on a property and exchanging is expressed in terms of weeks, not seconds, typically. So,
yeah. Well, I mean, at the end of the day, the user experience won't be anything like that. The user experience will be on their mobile phone. They'll select the kind of property that meets their investment needs, the select number of tokens. They'll click buy, and then it will operate within 6 seconds. So it may take a little bit longer, depending on traffic, but fundamentally the finality will be within 60 seconds at the max. So the fact that is revolutionary in terms of real estate. And what we're doing is we're decentralizing the marketplace. A lot of other platforms just tokenize real estate, and it's like a fund. At the end of the day, go and buy a fund. It might be, you're relying on trust because you're trusting a fund manager. So we're offering something different, where all we're doing is we're validating the information based around particular properties and making there's a point of truth where we know all of the information's been validated, and therefore the the property can be tokenized, and then it's an asset that people can buy and sell. So we're taking an existing market and bringing it on chain rather than tokenizing a fund.
You were mentioning about effectively creating an on-chain register, like a land register type thing. But I've seen companies trying that in the past. Trying to remember, some of the first ones were Honduras. I seem to remember was one of the early ones. And the only one that claims to be operating successfully, you could argue, is Estonia. Actually, Estonia and Georgia, but both of whom are done through the same company. But what the kind of challenges you see with putting a land registry on a blockchain?
Well, what you wouldn't do is actually put the registry on a blockchain. What you do is the validation of the information. So, and the problem has been interoperability. So what we've done is we have worked with the University of East London to look at how you need the point of truth. So if you can bring in AI into the equation, which will allow you to take the existing, all the discombobulated bits of data and bring them into some kind of order that then becomes a global standard. That way you've got a lot more chance of, it doesn't really matter what you're building on top in terms of a UI, but you need that base layer, consistency and sort of easily verifiable data. And the other thing we're doing is, with regards to the different kinds of authorities that will need to authorize various different parts of the registration, and the different asset, the attributes of the different assets. What we've done is taken the W3C standard and brought that to real estate. And I don't know if you're familiar with the W3C standard.
Yep. Yeah. Well, I've been involved in the internet for long enough to understand. And standards I find are fascinating because they're absolutely essential, and they will grind you into the ground. So you take a look at ISO TC307, I think it is, which is the blockchain standard, which has been dragging on for many years. Or if you want to talk about some of the crypto standards like FIPS, FIDO, blah blah blah. But, yep, there's so many standards all over the place, definitely. And that's an interesting one, Richard. And I think Stuart was mentioning TPX before, and Anthony Abel. I think Anthony's always open about the fact that one of the challenges that you have around things like standards and regulators and that is that in the real estate space, it means that you're having to comply with financial regulation, real estate regulation, crypto regulation, and a whole bundle of other stuff as well. So I kind of wish you well on that journey.
Well, it's been a long road, and we're finally, there's light at the end of the tunnel, as it were. But like a lot of other projects have gone off into Dubai and other places like that because it's a lot easier to go to market. We've attacked it head on. We've managed to get onto the regulatory sandbox, so we'll see what happens. But thank you very much.
Can I just ask you a much more basic question? Because I'm not so much professional on all these topics, but just to understand your basic business model, because I'm also involved in real estate a little bit, and I think the blockchain is a highly technical, high-end sort of device or tool. And real estate, which is very hands-on, very real, it's very, very opposed to markets, and it's very interesting maybe to bring them together. But just to make sure what you are really doing with your project, I understand that on one side, you're facilitating the checking of the purchase, of the sale and purchase of the property, but then also you tokenize it, meaning that investors can only buy a part of it and not the whole property as a whole. So, what service are you providing? Are you providing all of this, or what's really the use of making a token out of this? Because I think in a smart contract, a big deal would already be validating all the information to be sure that I can do the purchase securely. Huh? But then I would purchase the whole property and not a token. What's the token used for then?
The token is because real estate traditionally has been a very high barrier to entry investment. And what we're trying to do is lower that barrier to entry and also spread risk a lot across lots of different properties in different regions. So if you're an investor, you might want to have exposure to the UK market, Dubai, New York, wherever. So by having fractions of real estate, you can do that in a much more efficient, capital efficient way. If one market goes down and you need to realize your investment, there's another one that's going to be going up though, so it's more chance.
But then that's like a fund, isn't it? What's the difference to a fund then?
No, because you've got control over the asset, and legally you are the owner of the asset. You are co-owner, if you like, with other.
You sort of, with every token you buy a certain percentage of that particular property, and you're not depending on the fund manager that you mentioned before. Is that correct? So it's a more direct link, and I can decide on each property how much percentage I want to buy.
Correct. Yeah. So that your details are registered with Companies House as a shareholder within that SPV.
So for the seller, it's also a way of raising capital, like a crowdfunding, is it?
Yeah. And with real estate, a lot of the developers will actually want to retain some ownership in a lot of the properties. So it's a way of there being this sort of co-investment with the real estate developers as well. And going forward, we'll have the ability for real estate developers to tokenize the land asset, borrow against it to build, and then tokenize the property once it's built to repay the loan. So that's further down the line.
And your properties are all large scale. Like if I'm a smaller investor or like want to
no, some of them are like
house, would that be possible?
Yeah, some of them are very small apartments. To be honest, that's the better option because they're the kind of properties not normally available to the international market, and they're the best kind because they're close to transport links. They're in really high demand rental areas, especially in the UK. You've got like 20, 25 people banging at the door of a lot of rental properties. So, we're trying to take
I would want to buy a single flat, let's say an apartment, let's say in the center of Madrid. Could I register in your platform to raise a part of the capital needed?
You will be able to eventually, but at the moment we're just doing the fractional ownership of rental properties.
Okay.
Richard, did I understand what you're saying there effectively is that you'd have a separate SPV per asset?
Correct.
Yeah.
Okay, right. Because I was curious where you were linking the ownership of the asset to the token holder, which I didn't think you could do, certainly under UK law.
Modern timeshare.
Well, timeshare is different. So timeshare is different because you're not actually owning the asset.
I'm just kidding.
Yeah. But it's a fair thing because it then acts more like a trust type thing where you've got beneficial ownership, beneficial use without actual ownership or control. Sorry,
Sorry, can I say something, Gary?
Go for it, JT.
Yeah. So, Richard, I urge you to explore MICA in Europe. Because many people don't know this, that if anyone can launch a token, as long as you're not raising more than 1 million euros, and you don't need to have a white paper or inform the regulator. It actually is stated in MICA. So anything below 1 million euros, you can just do it.
You're saying you're doing TGE.
I beg to differ, JT. When you're dealing with a security,
don't differ because this was the MICA, the blueprint of MICA, was created by a lawyer from Liechtenstein, and he told me this, and I didn't know this part. I can actually send you a link if you want. You read this, you do not need in Europe. As long as you don't raise more than 1 million euros, you can launch any token.
But if you make a share, link it to a share. If it represents a share, then it becomes a security. So I I beg to differ.
You
But
can separate both. That's what I'm saying. Yeah.
Actually, if you link it to a share, doesn't that make it a derivative?
In the FCA's mind, it's a security, and yeah, as far as we know, that's the same for the MiCA and the European market. But we've specifically focused on the UK for the moment. When we're ready to go into different regions, we'll explore. I mean, we have got a lot of connections in Spain, so it's an obvious next region. But to be honest, it'll be a lot easier.
If you link to like you said, to a certificate of ownership of a property, then each token, then you are potentially, well, you have to do two things. Yeah, you have to one. It's about the utility of the token. What you're going to do, what is the utility of that token that you are creating? Okay. Is representing something. It's okay. Yeah?
It's a utility which way you look at it.
Exactly. So the MiCA is very, very clear on this. Okay. You just need to have a company registered in Europe. You need to prepare a white paper. You need to publish the white paper on your site, yeah, and no, you need to inform them first, the regulator, and then publish on your website. Okay,
Yeah,
as long as there's a utility for that token.
Can you just say what MiCA is? Is it a regulation or what is it? Is it an application?
It's European Union Digital Assets Regulation.
Ah, okay.
JT, I think I'd agree with Richard on this. You can have it as a utility if it's a token that's within your infrastructure and paying for infrastructure costs, i.e. transit on the network, but it becomes a security as soon as you've tied it to ownership of real property.
Yeah, so I don't disagree with that. What I'm saying is you can separate both, you know? There's a way to do it. It's how you structure it.
Maybe it's something for Richard to think about, because he's talking about he's going to be doing a TGE in the near future, which is another three-letter acronym, a token generating event. So go on, Richard, very quickly then, because I'm picking on you because you're coming up with a three-letter acronym.
No, I only said that. Sorry, Gary. One last thing. I only said that because I think it was Richard that said that it's a DAO per property.
Mm-hmm.
Yeah. So if it's a DAO per property, your utility token could be a governance token. Yeah. And
yeah, but I think JT, you're confusing the two. When our property tokens are shares in that property, so they are a security. But the XCAV token, which is our native utility token for the protocol, that's a different ballgame. I understand what you're saying about that.
So it's not a DAO per property.
No, it is a DAO per property, but the property token, which is the share token, which is the security, is the DAO token as well. It operates in the same way.
Is it a token or a coin?
I mean, it's a coin. Well, no, it is a token. Yeah, if you're talking about stable coins, it's not a stable coin.
No. I'm not talking about stable coin. I'm talking about, is it designated a coin or is it designated a token? Because they're treated differently.
They are treated differently. Yeah. It's not a utility.
I don't mean to put you on the spot. But.
No. It's. I mean, we're referring to it as a property token because it is a representation of the shares of the SPV. So it has utility because you can vote with it, but fundamentally it's a security, and it is classed as a security in pretty much every jurisdiction around the world.
It's kind of like an A-class share, isn't it? Then that effectively,
Yes.
it's a share with voting rights. Yeah,
Exactly.
Yeah, cool.
Yeah, if you structure it that way, then yes, it is a security. I agree.
Richard, I think you've been under the cosh for.
I've enjoyed it, and I apologise if I push back too hard. It's all good debate, but I'm at the end of a 3-year journey, so I'm a little bit worn torn, if I'm honest.
Yeah, it's good.
But I'm just curious why you chose that blockchain, because the reason is because time to finality is a lot faster, and smart contracts scale in many other protocols. Yeah, like Near protocol, for example. Smart contract is basically a shard. Yeah, so it can scale infinitely, no problem at all. And time to finality is like two
And
seconds.
no composability.
And it's just 2 seconds. Yeah, for example, and then they even did something with EigenLayer, and they made it as well. I think 3 to 4 seconds to time to finality, which they call it, I think, super final or fast finality on Ethereum. So there's many other ways.
At the end of the day, everything is a compromise. If you look at any network, it's either it tries to run as fast as possible, therefore all of the validators are of a certain specification, so the decentralization suffers. Others are very decentralized, but they're not as fast. You've got some that are very interoperable, and others are not. Rely on bridges, so they're an attack vector. For us, it's the best of all worlds. And then I don't know if you're familiar with Jam. Jam is the next iteration of Polkadot. It's called Joint Accumulate Machine.
But you don't need to do all of that. I agree with Gary. It's not like you are a payment layer or a DeFi protocol, or if it takes 10 seconds or 20 or even 2 minutes, it doesn't really matter.
Yeah, but you say that Mythical Games has migrated from an Ethereum, it was a custom chain, to Polkadot. They're currently doing millions of transactions on Polkadot. They wouldn't be doing that. They're a gaming chain, so they wouldn't be doing that if the finality was too slow. I understand what you're saying, but I'll just have to politely disagree.
Right, I'm going to give Richard the opportunity to get a breather and get the spotlight.
Thank you very much. Thanks, Gary. Thanks, everyone.
Because I also just wanted to know. I noticed we've got a couple more people who've joined us. So Ken's joined us, and Ken's heavily into Ethereum developments. But Rajesh as well. I see a new face there. I just want to say hi, Rajesh, and hi back.
Hello, everyone. Hello, Gary. So after long, because I really missed you. Just I saw your message every day. I thought I have to join to you on Sunday, but after seeing your message, I went to bed and slept. I missed you. Since last one is happening, but still I was working on before the laptop. Just check your message and pop in my window. I thought I definitely have to join this call.
Because I guess it's quite late in the evening for you as well.
Yeah, it's a late night. It's here. I think it's a midnight. It's a 1 a.m. Okay.
Oh, yeah.
Late was called to happen to around 12. It's a wonderful quiet is happening in the Indian scenario in crypto and blockchain segments. New thing is coming. So I'm working with you can say so many things. The DePIN also is coming up in propping this new market. People are talking about the DePIN area like something secure cloud or decentralized cloud.
Mm-hmm.
I don't know how much they will provide the security, all these kind of things. What kind of infrastructure they are going to build it, and also see. Meanwhile, I'm also propping my own idea to put my DNA on blockchain.
So I guess the quick question with India is you've got RBI, so the Reserve Bank of India, which is kind of like the regulatory body for this space. Are they any clearer yet on actually issuing regulatory clarity around crypto in India? Because they've been putting it off for years.
Yeah, recent 3 things has been developed recently. Financial Intelligence Unit (FIU).
Mm-hmm.
They are trying to regularize those entities are operating in the segment of cryptos. They are in the terms of doing the financial transaction, all these kind of things. Meanwhile, mainstream society also started to accepting the crypto payments, like in terms of entertainment sector, food, commodity, restaurants as well. Recently, one of the India's big giant company belongs to Reliance Industries. They started their own GeoCoin, which happened. People are like quite even the mass level. People are asking to me, even the street level people asking me to whether they have to buy, how to they use a GeoCoin.
Mhm.
And they are even my friends asking me how to involve, how to invest their money and all these kind of things. So I do not discuss this with my fellow friends. So it take time, understand how does it how work is all these kind of things, because these are very closed ecosystem. This geo-based company offering this solution to their own ecosystem, where people join their mobile-based things. They do some transactions, they do some activities, so they reward the client. It means mainstream companies are also entering these segments. So now, because the whole population is basically major property, major of people are you can say major chunks of you can say young people are much interested to part such kind of things. So that's why Reliance companies capitalizing this such kind of things in terms of industry.
Mhm.
In the terms of regulatory, government is not given the breathe and relax for the at the taxation level. They have the silent on this matter. What kind of rebate they can provide? They are charging 30% tax when they are anybody swapping. They are rebating, or they have to declare their income. They are getting the income through the crypto. So I think it takes time. It takes time
It's about to
when the
change, by the way, okay?
yeah,
Because
it takes time.
when Ambani gets involved, which Reliance and all the other industries, then things are going to
Is
change
it
very,
is it
very.
is it just 3 to 4 months ago they have started GeoCoin, because they have built their own ecosystem, Geo browsers,
Yeah.
Geo mobile, and Geo telecoms, and G5 services. At top of they have they built the GeoCoin.
I've been reading quite a bit about that. So, for the people here that don't know, Ambani is probably the richest family in India. Okay,
Yes, yes.
they control a lot of things and basically are Modi's best friend. You know, so there's something else that people, I think, majority of people have missed this week, which is Coinbase announced they are entering India. So if Coinbase announced they are entering India, it means that they have some clarity on regulations.
Mm.
There was two things that I captured. Actually, three things I captured this week were quite into. Actually, four. One of them was Coinbase coming to India, and of course, all the stuff that's going around with Reliance and Ambani and so on. Okay, it's going to progress very fast there, in my opinion. Another one was Coinbase announcing that they are going to provide derivatives in the US. Yeah, so they are preparing. They are in a huge hiring spree, 1,000 people that they announced they're hiring. So that is super interesting. So they, of course, Coinbase is very much insiders in the US, and if they are telling all of these things and they're saying they're going to India, then things are about to change not only in the US but also in India. I don't see a world where Coinbase would announce going to India if they didn't know something. Yeah? The other one that I was super interesting was the Crypto.com got a license from Dubai, from Vara, to provide derivatives. And that's super, super interesting. It's the first license that Vara has given, providing the derivatives. So Crypto.com already, I think, had a license for payments, if I'm not mistaken. And then they got now a derivatives license, which brings me to OKX. So OKX bought a company in Malta that had a MiFID II license. So a MiFID II license means that you can provide derivatives for the European Union market. Yeah. So that means OKX is pretty much just waiting for the Malta regulator to say yes, the transaction for OKX to buy this company is finalized. Yeah. And that's it. They can start to provide derivatives for the European Union market. It's super interesting. There was quite a few announcements, and like Strategy also is going to raise 21 billion. Um, so they're going to provide stocks. It's through stocks, yeah, and that 21 billion is very much for buying more Bitcoin. That's a lot of money, $21 billion, you know. So that was super interesting as well. There was a lot of stuff that happened this week, actually.
So I was trying to keep up and post some things on screen as you were saying that, but
Yeah.
you went through so many things, certainly
Yeah,
around the derivatives.
sorry.
And,
It was a very busy week, actually, you know, in terms of news. I was, and of course, Liberty Financial from Trump completed the 590 million token sale, which is super interesting because I don't know if you guys know this, but on the terms and conditions, basically you are buying the token, but you're not getting any tokens, and they don't need to give it back to you. It's actually in the terms and conditions. So you're basically, it's a donation to them. It's so crazy, you know. I can actually dig that term and condition because I've never seen anything like that.
because the other thing, just going back to OKX for a minute,
Yeah.
'cause I noticed some other news about them the other day, which was actually were they were claiming some issues that they were or were not being investigated by the EU regulators around potential money laundering things.
They were.
Yeah.
Oh, I missed that one.
Yeah, so it's something because I mean the reality is probably all of the exchanges are permanently being looked at for illicit activities and that. But it was just curious because there was mention on the website like a few days ago, just taking a look at this now, about how they could potentially lose their MiCA license. But I just think that's a bit of a horror story that people maybe are putting around. Whether that turns out to be true or not, we'll wait and see.
Oh yeah, they will lose it straight away. I mean, there's no messing around when you operate in EU or UK, and you have that type of license. You know, if you don't do the right things, you lose it, and that applies to any company. Yeah. So.
Yeah.
And of course, they can't comment because those things usually, even if they are investigating, if that happened, you know, they might not be aware. So it's under investigation and probably involves Interpol and all of that stuff. So they can't comment at all.
Yep. Yeah. And it's something that the regulators and law enforcement agencies aren't going to admit to it.
Yeah.
And the companies under investigation aren't going to admit to it. So, you never quite know what's really going on. Okay, folks, we've only got about 5-6 minutes left. And that's been really, really interesting. We've delved quite deeply into tokenization of real estate, which is always a fascinating topic. So, Richard, thanks for sharing about Excavate, and people can check up on that separately. But I just wanted to open it up. Anyone for any other questions or comments or anything? Put your hand up or just speak. It's great. Yeah, everyone's either being really, really polite or everyone's going, "Oh, that's it. I've had enough time."
Oh, I think it's not enough time. I don't think.
Go for it. I think Stuart was trying to say something while he was on mute there. Was that right? No?
Go for it, Stuart.
No, I'm actually sucking a throat pill because I've got a cough and I want to stop coughing. But Richard, thank you for your presentation.
No, thank you everyone for being so patient with me on a Sunday evening. Thank you.
Gary, there's one more that I missed.
Go for it, JT.
The Genius Act. You know what is it?
The what?
Genius Act.
He keeps doing this to me.
It's the Stablecoin Act in the US. So it's on the Senate floor. So it was accepted to go on the Senate floor. It's super interesting, you know. And the draft is basically it splits. I think split power between state and federal authorities. Okay, for this, and it's all about the regulation of stable coins and the transparency of it. So,
okay.
So
there we go. The Guiding and Establishing National Innovation for U.S. Stablecoins Act.
Yeah, that's
But
exactly what it means.
they must have spent ages trying to work out how to turn that into an acronym, mustn't they?
Actually, I've heard that the US are going to get all the banks to release their own stablecoins. That should be
Hadn't heard that.
that should be interesting.
How does that work? Because that's going to totally blow.
Where did you hear it?
It was on a podcast. I'm trying to think. It's a well-known one. Can't think of it off the top of my head. I will come back to it. But in the US, the banks used to issue their own notes, so it's nothing new. And in fact, supposedly it was a really good time for banking because it meant banks were competitive. So yeah, I don't want it. I don't think it's necessary. But I think the US want to bring all of the stable coins back to the US. So, and they want to keep the US dollar as the global currency. So it's a way for them to do that.
I will ask our chief economist, who is also an advisor to Trump.
Okay.
So we've got him on our team. Steve Moore, if you want to look him up.
So,
There are several European Union banks that have already stable coins and a lot more. Because if you're a bank, you pretty much tick all the boxes for MiCA when it comes to stablecoins. Very heavy regulation for stablecoins in Europe, but there's a plethora of banks that are going to come up this year with stablecoins around the European Union.
But in the US, doesn't that mean they're going round in a big circle again? Because I think Richard mentioned originally, state level banks used to issue their own notes and that kind of thing. Which it's never really gone away from that kind of like regulatory type thing. This is where I work with startups. I still have the entertainment of explaining why it's called the United States and not United America, because each state has its own regulations as well as the federal regulations now. Which this is where Stuart and I may disagree in terms of innovation opportunities. That I find the US incredibly difficult because of the complexity of the regulatory environment. You're having to comply with Wyoming, New York, California, all sorts of things. So an interesting space.
If you comply at the federal level, it automatically overrides the state requirements.
Okay.
If I hear this, I think it might happen as with Google. The internet originally was the space where information could be exchanged freely and nobody controlled it. But then Google sort of subvaded it or sort of circumvented it. And I think Bitcoin, we call it as the free system. Nobody can control it. Freedom in as a systemic thing. This won't happen. People won't allow this to be a real free system. And a bank coin, for me, is the initiative of controlling this free world, wrapping a shell around it so that in the end it is controlled. And what will happen is that the Bitcoin will be more control than before and not less.
I think it's already BlackRock control Bitcoin at the moment.
Yeah.
I think if you look in the ownership of Bitcoin, as you say, BlackRock, Grayscale, the major players already got a great big thing. This is where it comes back to, I still believe that Bitcoin is an experiment, and it's an experiment in technology, and it's an experiment in culture in some ways, of proving whether you can have true decentralization or centralization. And I'm going to have to close the call off on this, really, but like any other experiment, sometimes they succeed in proving things and sometimes they succeed in disproving things. And I do fear, George, you're right, that it might actually be that what might appear to be like freedom and liberty or whatever
It'll be the contrary, exactly the contrary. It will be more control.
Exactly.
I'll throw a curveball there. It's all going to be provided by Ripple.
Oh. Right. Well, with that, yeah,
I'm not joking.
Yeah, but it does seem the way you see Ripple being mentioned in various meetings now in the US, it does seem to go down that way. I'm getting thumbs up on that, folks. That was a really interesting finish, to be honest. We are going to have to close off now because I'll try and close these on the hour. So thank you everyone for your participation. Richard, thank you for sitting in the chair and taking the interrogation, and thank you to the interrogators as well. Really interesting stuff.
Stuart is the
Stuart. So yeah. It was really good fun. So thank you, everybody. Hope you enjoyed it. For those watching online, click on subscribe, like, or even better, come along to one of these sessions. You have a great deal of fun. Thanks, everybody, and have a great day.
Thank you, Richard.
Thank you very much.
Bye, everyone.
Bye.